again, I'm sure a lot of you have come from smart money or something like that, but we want to really make sure that you understand we don't trade structure how everyone else trades structure. We rarely use it, and it's only used in very specific circumstances. So we don't want you to just go applying structure whenever you feel like it, because that's not how we trade. And we'll show you how we incorporate structure into our trading. So obviously you have to understand the difference between main structure and internal structure. Internal structure is going to be the structure within the main structure, basically. And internal structure allows you to identify the sort of next type of market behavior. So let's jump in to some examples.
And maybe stay on this one quick.
Of course.
Again, so it's important about this one. Again, first, as Cam said very well, we are not structure traders and we need a smart money traders, right? We will be cycle traders and intraday traders and liquidity traders. Again, that's why everything you see here, on which again, maybe you saw, oh, maybe I knew this, maybe this and this, you will see how different we will use everything very soon and how much clearer everything will be. And that's actually a promise. It's like literally trading a different strategy. Okay, but again, let's be aware to also understand the structure basic shit. Again, nobody of us really use it, but it's important to understand, again, the basics of what is internal structure and what is technically a main push. And here in black, everything inside that is the purple one, right? And everything inside a purple one, that's the red one. That's why you're not getting confused about the structure too much, right? And again, we'll show you very soon of how to use it.
I mean, yeah, and also not to confuse anyone too much, but eventually later on we will get to the point where we are trading directly against structure, and these are some of the of the nicest moves that you'll have. So let's jump into it, because it's important that you understand it. Even if you're just going to be trading against it, it's still important that you understand how it works. So obviously here we've hinted at it a little bit, but let's go into structure. So basically, this structural point, although you can't see it, has reacted from a higher time frame POI to the left. It'll also we'll use structure if it's induced something to the left, but we'll cover that at a later point. We don't want to throw too much at you right away. We want to get you to like a strong point. So as you can see, we do use the internal BOS after it has done something that we like. That's either a higher time frame POI or an inducement. So here we can now look to trade away from this. And as you can see, we have our main BOS. We come back up, we fill this imbalance. Probably some of you would have been waiting for this. That's fine. We have confluences on where to get in here again, and then we're just creating new lows. And as you can see, we've got the lower time frame here. So on the lower time frame, this is also like our internal BOS, and you can get in there as well. So that is that one. Let's jump. Do you want to cover this a bit more?
No, I think that's fine. If you go to the next one, again, if you see it in here, like, why do we use some sort of structure? Because obviously you maybe question yourself, like, oh, if you just said you don't use structure, like, why are you showing us? The thing is, again, it, like, as a trend line, it can work from time to time. The thing though is, as we combine everything a lot of different materials which we show you, it definitely can be one of many confluences we will have. The only thing about structure is, again, very important. Write that down. Don't get confused and too much into structure, because overall it will damage you more than will help you. So only, again, we will show you the only times when we use structure and when it makes sense. For example, as you can see in here in this illustration, if, again, even an example Cam covered before that, let's say this is a 4-hour zone as we had it before, right? A very interesting zone. We will show you obviously this one later also. Then it taps into it, right? Why is this red? Because of course trend traders, they want to trade the continuation, right? Then of course, if it gives a higher time frame reaction out of one point of interest and then breaks the structure and leaves again another supply demand zone, in this case obviously a supply zone with some sort of imbalances after it broke the structure. Again, the structure is always the push that led to the highs. Again, not this one. Like if it just makes this one in here, this is not a structure point. This is just a new low of this push, a new low in here. Only the moment it breaks here through this one, this is some sort of structure break. And then it makes sense. Again, it kind of locks in the direction. But again, very, very important. Be very careful about these locking in the directions. We will dig into it later a little bit more, so you can see where not get trapped into. For now, again, the very, very basics. If we have some sort of higher time frame point of interest touch or imbalance fill or whatever, then we're having a break of structure after that into another zone. This can be sometimes better, right? Again, don't get too crazy about it. For example, if you have it in here, taps into higher time frame point of interest, this was the push that led to this highs, right? Inducing this equal highs once again into this point of interest. This push later on gets obviously broken, break of structure. And of course, here's your huge imbalance. Here's your little equal highs, induces it, taps into, fills the imbalance, fills the mitigation, right? And then of course, continues in the other direction. And again, we never think we covered it, but yes, if they, for example, do exactly this, if filling the imbalances and tap into it is called mitigation, right? This is the mitigation. Why is it mitigation? Because of course, Enigma, hedge funds, banks, institutions, they're having orders everywhere. And of course, they just have to get out of the orders at some point. Again, price has to be fairly delivered, and they just call it a mitigation because they have to, at least mitigate the chaos they created. And of course, closing the orders at some point as well, right? That's the mitigation. And we will obviously use the mitigation and show you the mitigation on a later point much more. But of course, just be aware of how we slowly but surely combining everything, right? Higher time frame supply area of the structure being broken, left imbalances, gives us our supply candle, taps into it, takes liquidity a little bit for equal highs, mitigates, is ready to continue, fills and obviously filled and deliver price fairly, and then continues. Again, just in a very basic nutshell, but don't get too excited about it. You maybe heard about this before. Again, this is literally 1% of everything, so don't get too crazy about it, okay?
Yep. Let's continue. So, little points about market structure. It's similar on all time frames, weekly to M1. We call this fractal. Downtrends and uptrends should be traded with continuation trades. Consolidation is where you can trade in every direction, obviously not left because that's trading in the past. You get multiple POIs, internal structure plays, momentum mitigations, which we'll cover, extreme mitigations and structure break mitigations. Main time frame should overall be M5. M1 should only be used for refinements and entries, and M15 and higher is used for overall direction. Breaker structure is used after a previous high or low is broken in the form of lower low, lower high, higher low. So this is market structure in the ideal sense. So this is how people portray it. We'll show in a bit that this isn't quite how it works, but we do need to explain it so you understand it. Right, how to read market structure. Main structure is the main push, so basically the whole push from where it started, trade in line with the trend, and you can have internal structure plays inside the main push. Internal structure and pullback, so this is basically any structure within the main push, and this is used to trap buyers and trap sellers as well. So let us go on to the next one. Keeps in mind, they can become helpful in the future, but you have to be very careful with these kind of plays, and we'll explain why. So obviously this is just basically what we've been through. This is the push. This is the POI that you get from the push. This is obviously all internal structure. This is the mitigation, and then the continue. Obviously you're going to have within this internal structure fake outs and stuff like this. So just bear that in mind.
That's what we love though, right? If you go back
yes.
again, this is what we love to do. And then obviously our entry is in here. Again, then we would trade actually until here. This is our reverse trade. And then again, but yeah, this is stuff we will do left and right later on.
Yes.
But yeah, let's just dig into the next one.
Absolutely. So the difference between boss and choch.
Let me just explain it quick. So again, as you probably have some sort of smart money background, as you probably most of you guys have, and you heard always these break of structures and these whatever they call it kochs, change of characters, whatever. And they technically saying like, oh, everyone else is using it, so guess what will not work if everyone else is doing it, is obviously this boss and kochs. Of course, again, not to shit on anyone. If you see some sort of success with it, congratulations. Again, I can promise you there's people trading a trend line also which has success. So that's nothing really to be too proud about it. But of course, it's not anything against someone. But in a nutshell, this boss and kochs, whatever, change of characters and break of structures, of how they use it. Again, if it's higher highs kind of thing, they say this is a break of structure. This is a break of structure, makes a new high, this is a break of structure. But the moment it kind of changes the directional bias, like again, this makes a new high, and then of course this one didn't break this one, okay? So this one is just a break of structure to a low side. But then the moment it takes out this structure point to the left, it becomes their koch, right? Or the change of character, and out of a sudden, they say that now the directional, the shift of the market changes, and then of course it goes on forever to the downside. The thing though is, this of course works at some points, but it will also work not so well on even more points. And of course, we'll just dig you into that to kind of get rid of that ghost inside you and just wave it out when we light up the sage and whatever, like get the evil demons out of you, and then of course show you how to really do it. Okay?
Yeah. We'll also show you some examples that maybe other smart money traders, like the smart money trading gurus, won't show you, of when it doesn't work. And when you see this, I'm sure you've all experienced it. Oh yeah, it's a choch. So now I've got to trade this direction, and then it just gets completely blasted. And we'll show you some examples of them, of course.
And again, it's in theory, it always seems so amazing, right? Again, that's where they easily can show you these examples left and right, because yes, of course, in hindsight and theory, yes, there's definitely a lot of examples you can find where it works. But again, as Cam said, how many times they literally speak about the examples that don't work? And the answer is they just ignore it, because again, in hindsight, it's getting covered up a little bit. But yeah, we will show you again why it's not such a good idea to focus on these kochs and bios is too much, and then again show you how we use it instead.
Yeah, so as you can see, here's some, obviously, like Reem said, there are times where it does work. So here we can see we have our choch, and then obviously our imbalance and our supply candle. Price comes up, continues, lovely. Same here, choch into the imbalance and the demand candle, and price continues in that direction. I believe we have a couple more examples of it working. So obviously here we're just creating a new low. So this is just a BOS, as they call it, just a BOS. And then here is our change of character with our imbalance and our demand. As you see, same old. Again, change of character into our imbalance and our demand candle.
Yeah, so as you can see already, again, looks troubly, looks amazing, looks clean, everything like, oh yeah, that's amazing. But of course, there will be a few issues already with that. And now, if you want to go to the next slide, we can find out like where these issues come from, right? So it already gets a little bit out of hand by just using structure and the understanding and purpose of it. For example, if you just have something like this, so maybe whatever, just even for argument's sake, we say this was lower than here, right? Whatever, something like this. And this is your push that led to the high, and this is some sort of koch, right? Then again, this technically leaves on POY, but the extreme is also on POY. So which point of interest would you pick on just a structure level? And that's where the funny thing literally comes in, and these people, they literally tell you, oh no, both are valid. Whatever, just sometimes this point will work out, but sometimes it comes to the extreme. But what type of explanation of that? If they literally split it into two zones because they literally don't know what's going on. And that's where the problem with structure comes into, because again, sometimes, yes, it is very clean. You only have one point of interest and it taps into that. Congratulations, it worked. But what if it's not that clean? And like literally 90% of the cases, we have multiple points of interest and the structure will help you shit. But of course, then at some point it will work. And that's the example they show you and say, oh yeah, it tapped into that because this. So, but that's not the truth. Again, as you should see, for example, this can happen like this, where it taps into here, gives some sort of reaction, smokes into it and taps into here. But also it can happen something like this. But again, structure will not help you finding out the reasons of why this will be the case. Of course, it can help you finding some sort of these points of interest after some sort of Koch, whatever, depending on how the structure looked like in here, right? But it will not tell you of what zone will work and what not. That's why intraday trading will give you a very, very, very good directional bias and what to expect and what sort of zones to not expect will work out. Okay? Cam?
Yep. So, exactly like you said, you know, the most funny part is when they have two or more POIs and they just split the risk and enter on them all, and then they call it risk management and trade management, and it's all just a game of probabilities. So as you can see, in this case, you know, they split the risk. So let's say they're risking 1%. You know, you risk 1/3 here, 1/3 here, 1/3 here. And the thing is, this one gets smoked. This one even gives them a reaction so that, oh yeah, this was the one. This is why I split the risk. And then obviously they both get smoked. And they're left, oh, even down here as well, they're left crying. And this is made no more obvious than this slide right here.
Just leave it. Let's leave it in this one, Cam.
Mm-hmm.
Again, this is just an illustration. Again, you maybe think that's over accelerated. And again, the next slide we will show you of why it's literally not. Again, in hindsight, they make it look like pretty obvious, but it's literally not. Again, like if you just look at these Kochs, change of characters of how they say it. Again, this is the push that led to the high. Awesome. Okay, gets broken here. Awesome. Okay, so they switching again the bias. Oh, I have my extreme mitigation thing and I have my whatever. This is the push that led to it. Okay, so they're leaving up with two zones. Then of course, they having even a new low, right? And then maybe again, first of all, they're trading the order flows. Obviously gets smoked like 2 times in a row. Even they're taking this zone and this zone. It just won't tell you that they took these both zones because they're getting smoked 2 times in a row. Because they think, no, the overall structure is in here or like in here, right? No worries, right? Guess what? Then it makes a new low. Overall, okay, but guess what? For other people, this in here was the Koch again. Because again, overall, they're seeing still maybe an uptrend, right? And again, this is just a pullback in their opinion. And this led to the Koch, the change of character, right? Again, this is the push, they made a new low. Obviously, that's get taken out. Koch, change of character. So of course, it has to be this point in here. Or if it's a pullback in here also, it has to be this point also. But guess what? It gets taken out, gives a reaction. We call this literally smart money trap in here. This also, of course, very obvious one. It gets smoked. The thing is, again, structured traders have no idea of why this might be the case in here, or even this one, or this one, or this one. They literally don't have an answer. You will have multiple, countless of answers, right? But again, now just take this. Again, you maybe think, no, that's not true. My other guru told me this is not the case. Let's literally look at a real example of what is it, Cam? Like a week ago? Something like this? So let's look at this. Okay, and again, this is not making shit up. This is literally just looking at Kochs and of how they tried to make it work, right? So just left to right. So guess what? Obviously, we cut out a little bit, gave a Koch to the downside. Of course, the extreme mitigation has to work. Of course not. Going higher, right? Obviously, this is a push, gets a Koch to the downside, right? So of course, it has to work in here for a reversal trade. Of course not, right? Next thing, makes a new higher high, gives a Koch, has to work to the downside. Not really, is it? And of course, no Kochs, no Kochs, no Kochs. Other than this, obviously this is again the push. that led to the high, right? Some sort of break of structures, right? Again, not literally Koch. The Koch would be down here, like this, because this is the push that makes it high. So this is just a break of structure. But guess what? They thinking, of course, it should go lower. Of course, it does not, right? Then guess what? Even takes out the high one more time, smoking everyone. Now, of course, this is the push that led now to the high. This is their Koch, right? And of course, this leads to the all the way to left interest, because now they think, yeah, it has to make new lower lows in here, right? Guess what? Taps into here, fakes again the continuation for, yeah, order flow traders, continuation traders, gives again the Koch to the upside, again tapped before that into here, and of course they're taking the order in here, getting an immediate L in here. So now they're having a Koch overall, because this is obviously the push that led to all this, having a Koch. So they're looking for buys. Again, now internal Kochs, right? Of course, here's their zone, getting smoked. Maybe they're taking the continuation trade after, like obviously now this becomes the Koch to the downside, right? And of course, the continuation trades would be in here. Funny enough, here's the inducement just wicked. Of course, they will not tell you. They just tell you, no, my stop was a little bit, I included spread. Then all of a sudden that their stop was in here magically, and then they just show you that they are in this trade, right? They have no idea of why they literally get stopped out, right? So now obviously this directional switches to the downside for them, right? But maybe not. Maybe a few people still see this as an overall trend. And of course they see this Koch, which led to a Koch in here, has still imbalances, has to work, right? So they're waiting for the internal Koch, right? So guess what? On an internal basis, maybe they have some sort of break of structure higher to confirm it. Obviously not, get smoked. Then having this zone, never get tapped into, they're left all confused of why they're getting not tapped in there. Then again, this is the push that led to the low, getting a Koch in here. So of course this has to work out in the future. This, funnily enough, gets induced one more time, right? And of course, you see it's going over and over again. It literally doesn't even end. And again, like there's just one example where it worked, just one. And even if you say maybe maybe no, I wouldn't have taken this one. Okay, what about whatever this one or this one, or like maybe whatever this one or maybe this one. If you're not taking this one or maybe this one, like what's the reasons why you haven't taken it? So where's the ones who literally worked? So maybe whatever you can find it. Where is it? Where's the just one example that literally worked? And even if you find one examples, there's literally 15 losses in there. And that's this quote-unquote smart money concepts in combination with structure and supply and demand overall. It doesn't work as much as they try to tell you to make you believe it works. It definitely does not work. Again, it can work if, for example, reasons we will show you later. But yeah, Cam, Sakpo, you actually want to add into something like that?
Yeah, well, also, like, what you've got to notice is even when they're waiting for their confirmed entries, right? They're not taking it straight off here. They're waiting for their internal choch. They're still getting smoked and they're still getting baited. And this is the thing. They're going, on hindsight, they can probably explain, oh yeah, I didn't take this because of XYZ. I didn't take this because of XYZ. But how do they explain, let's say you can't see all of this price action to the right. How do they explain, no, don't take this? They don't. They can't. But in hindsight, and I'm sure all of you who have traded smart money have felt this at some point or another, where you're at this point, you take a loss here and you can't understand why you did. And you go to your mentors and you ask them and they give you some lovely explanation that then you have another example where suddenly the explanation they didn't give, oh no, of course you don't do that. You actually do the opposite. And it's all just hindsight stuff that they love to give. Oh yeah, you do this. Oh no, you do this. And it's all explaining it after the fact. It's not explaining it when it happens, because this is not explainable.
Yes, and then again, very important, again, maybe a few people getting upset right now because that's how they traded. And they say, no, that's not true. That's not how I trade, blah, blah, blah. Again, it's not to shit on anyone or you don't need to defend it. Again, this is literally out of experience, because guess what? We had a cooperation with obviously smart money traders, and we are in a community over a year now, right? And guess what? Every single one of our students moved away from these quote unquote smart money concepts and structure. Literally no one, zero successful students of us trade market structure or smart money. So again, just trust us on this one, because that's literally the case. Of course, you can keep hold on it and say, no, that's not true, and this is da. But again, this will not bring you anywhere. Again, you will have so many different other explanations and reasons of how to trade. So again, just be aware that this smart money hype is not, fortunately not as everyone wants to tell you it is. But again, yes, of course, you can catch a very good trade based on that. But that's more like hit or miss, right? And this is not of how the market works, okay? So let's just go to the next slide of like looking at other people of how they do this. Again, they just obviously, again, if you want to switch the slide cam, again, the good news about that is all these gurus will not tell you that, right? So again, they will just say, no problem, blah, blah, blah. They give you another, now you have to combine with Wyckoff to make it work better. And you have to use 16 combinations of time frames, and only if you have 16 Kochs, only then it's possible. And yes, and you will find one example in 2 years which it worked, but wow, then you're trading once in 2 years. But what's the point? Again, you obviously saw our stuff of how we trade intraday, and of course, there's opportunities literally every couple of minutes. That's not even a joke, depending on how much currency pairs you look at, and how much you want to trade, and how risky your entries are. So again, not to shit on anyone, not to make anyone upset or mad. It's literally just to open your eyes, and hopefully you realize, oh wow, they have a community, a very successful community, and no one of them is trading smart money or structure. So there has to be something to it. Okay, so if you're one of them who trades smart money, that's something you probably have to limit a little bit more. Okay, so let's dig into a few examples though.
Yeah, let's go. So let's get into some examples that they maybe won't show you. So here, what do we have? Well, we have our choch to the downside. So obviously, this is where they enter. Amazing. We get another choch to the downside. So this is what they would call the safe entry. So that's the safe entry.
Literally, that's the literally very high confirmed entry. A Koch after a Koch, and probably even this one was like some sort of higher time frame Koch as well.
Exactly. And then then they just get wicked out, and you see how we give another pullback into another choch. So at this point here, maybe we've had
to say like no, because it was equal highs, right? So here, right?
Exactly.
And then they're getting another Koch, and no.
And then maybe if they don't read it that way and they see this as a bullish choch, they're gonna enter here, and there you go. Or the more convenient one is where they get choch on both sides, and
the best one.
they don't mention the time where it doesn't work. They just mention, this is a hedge. I've hedged the market. The market's trapped. Whatever. This is the point where, and look, even here in this example, it doesn't even tag them in. It just fills the imbalance. But look, we've got choch. So first, we've got choch to the upside. So maybe there's no nice POI in here. So maybe they do avoid this. And then what you've got is choch to the downside. And here you've got both this one and this one. So first off, let's say it played from either this one or this one. How do they know which one? They don't. And in this case, both of them get blasted anyway. But then they just go, oh, of course, I've now had a choch to the upside. So of course I should have been buying. And then obviously when this plays out, they conveniently leave off this one here, and they just mention, guys, took this 1 to 30. Maybe they remove volume at 1 to 5 as well, but who knows?
Yeah, that's the funny thing if you see then these Instagram gurus in here, they're opening a position here and here, right? And then they just hold both. Like obviously this is a sell and this is a buy, and then they just literally don't know. They just gamble, and then obviously if this one plays out, obviously this one break even, but they show you this trade.
Yeah,
so
exactly.
That's literally what you will see from a lot of these smart money concept traders out there.
And some of them will even have, you know, this position open, and their screenshot
literally
will be around
in the middle. Yes.
Yeah. And they'll say something like market trapped.
Yeah.
That doesn't exactly scream that they know what they're doing, does it? So let's go over some more examples.
Yeah, exactly.
So here we've just got a simple BOS. So where would our mitigations be? We've got 3. These are all of the ones with imbalance. How do we know which one we pick? Well, if we're trading smart money, we don't. So we just give a go at all 3. So decisional 1, decisional 2, and extreme. Possibly this is the test from your Wyckoff. Maybe. So let us look. So there we go. Confirmed distribution sells. So obviously we are going to sell. So now we're in. That's our limit 1 been tagged. Oof, it's fine. You know, losses are part of the game. It's probability. Don't worry. This next one, obviously that's the one. Oh, no, it's not. So now we've got the extreme. But don't worry. Obviously the extreme will work. Oh, so, now the extreme hasn't been tapped. So we need to buy up to the extreme, of course. Decisional 1 looks good as supply to demand shift. So we'll take that as our supply to demand zone. And then we've been tagged in. What do you know? Look, we're going to make back these 2 losses, and then we're going to get into the sell as well. And we're out. Okay, that's fine. That's fine. We've still got, we're panicking. We're panicking a little bit. Everyone knows that the 3rd loss after that, you get a real boost and you actually start to read the market correctly. So we were just dipping our toes into the water. So obviously now the extreme for the buy, of course. Now we can be calm. And now we can panic again. Look, we can blame the composite operator for that one.
Yeah, we should have looked for, again, if you go back again, we should have just wait for Wyckoff confirmations here.
Of
right,
course.
that would be the key, but then it was just out of it.
Because the reason is we obviously should have hopped down into the 5 seconds, and you would have seen the distribution.
There was a 0.1 pip imbalance.
Of course, and the distribution there. So we needed to be careful. That was just our bad, of course. I'm sure if you go to one of your mentors with that, they'll let you know that.
Yeah, but the thing is, again, I think we shitted enough on structure. I think everyone gets the point, right?
Yes.
It's not to make fun out of anyone. It's just, again, to make fun out of these gurus which try to literally explain you that this is the way the market works. But it's obviously not. And again, they would just never show you these points where it didn't work, or then they literally just say, oh no, it was a valid loss or something like that. Because they literally don't know the reasons. But guess what? Now you're in a very good place where you will have a lot more answers and true facts of what's going on, right? So if you go to next slide, again, just to end this little shit talking a little bit off, the bitter truth about this market structure, or like this overall smart money concept, is that you probably realize that majority of these marketers, like literally marketers, not even traders, but marketers, try to explain you that market structure in form of like these break of structures and change of characters. That's the way to go, right? Again, they show you with multiple combinations, like Wyckoff, higher time frames, nada. But the reality of market structure looks very different, as we showed you just a little bit earlier. And again, these break of structures and change of characters, they are nothing else than a retail way of analyzing the markets as well. But of course, as we said multiple times, it will work at some points. And of course, it looks amazing in hindsight. And of course, it's amazing to look at these Instagram posts where they show you these little cheat sheets and like free whatever confirmations and stuff like that. Yeah, of course. But guess what? Do you really think that's what's going on if all these 500 Instagram gurus like out there show you the same stuff of this change of characters and break of structures? Do you really think that is what's going on and that's the secret of how the market works? Again, not really, right? The other thing is, and again, that's what the side you probably never heard before, is that we said it earlier a little bit, we had a cooperation with one of those smart money concept providers, and we had also one mentor or whatever, educator, whatever you want to call him, that focused big time on structure. Right? Again, we had even people that focused big time on smart money, but also big time on structure. But guess what? Very, very soon, we realized, obviously we realized before, but of course we wanted to make a cooperation, but then we realized very soon that this is not good. This is not good, and this confuses people more than that helps them, right? And after literally a year, we couldn't do it. And again, now we realized that also everyone, again, of our students who sees very good success goes on our recommendation and says, don't use market structure and don't use like the smart money concepts. And out of a sudden, that's where the huge change came from. And again, now every successful student we have, they don't look at market structure. They don't look at Wyckoff. They don't look at whatever supply demand flips and shit like that. Again, that's not what we trade. Again, we liquidity traders, cycle traders. And again, we cannot be surprised of what's going on. We cannot guess. The last thing you should always do is guess. Oh, I have 3 POIs. Oh, I just guess this is the one I'm taking. Or, oh no, this is this push. It led to the high. It has to work like this. No. Again, we will show you a lot of different concepts of what's going on. And again, it's definitely not based on market structure, but of course, there is just one way we can use it for confirmations, and then it's okay. Then we can do it. And again, that's only one way to do it. Okay. But for now, get like rid technically of this market structure overall, and you will see it will definitely help you. And also get rid of the smart money concepts overall. It will help you in the long run, and focus solely on liquidity inducement cycles. That is where the huge aha moment will come, and you will see how clean it actually can be, right? And not guessing anymore, right? And of course, we get rid of this disturbance of this other stuff and bring clarity with the liquidity and the cycles. Okay, so if you go to the next slide, what we do with this break of structures and costs for now, we only will use structure breaks or change of characters in one way. First of all, you throw it in the trash, and again, we put it like in a more simpler way after we got other confluences, and then only then we will look for some sort of confirmations with some sort of break of structures. Again, we never will use Kochs ever again. You will not have us speak about it after this, right? So Kochs are gone. Again, we will only use it for other confirmations, and we just call it a break of structure. Okay, so we stick kind of to a break of structure, but only, and if you want to go to the next slide, Cam, again, the only time you look for a break of structure will be after either an inducement or a higher time for mitigation. So let's say, again, our cycle plays in line. Of course, we will show you exactly what these cycles will be. If you have an inducement, after an inducement, we have some sort of break of structure. Again, it's push led to the high. Then, and only then, we can get something out of a break of structure. Or again, if we have some, again, not as everyone else does it, but in very specific forms, where the daily cycle lines in here, we have some other confirmations. This is also a higher time frame confirmation. And then, higher time frame mitigation. Then, again, only then if the market cycle aligns, we're having a break of structure, same scenario. Okay, but that's it. That's literally the way we use a break of structure. That's it. It looks very simple, but you will see why it's like literally 50 times more efficient than looking at 17 points of interest and every point possible and don't know what point to pick and what point not to pick. Again, this will make your life much, much easier. Okay, so let's dig into a few examples.